Welcome into my InvestEngine portfolio update. Now for the month of June, we are halfway through the year and certainly a lot has gone on already for us investors. Just very briefly before we jump into the portfolio itself, let's have a look at how the overall markets have been doing. I'll pop up the S&P 500 on screen now, at least for the last month. You can see up 5% or so. It's actually had an extremely positive rebound, and certainly the big news going on at the moment has been the pausing of tariffs between the US and China, although this is only going on for 90 days so far. After that, we have no idea what will happen. Closer to home, we had the UK and US sign a trade deal between each other, although how much impact that's going to really have over the next few years, nobody knows, but at least that got done. Sticking closer to home with markets, you can see the FTSE 100 up here, just up about 2% for the month, so slightly lagging behind the S&P 500 for the time being. However, when we jump into the portfolio update, I think we're going to be quite interested in looking at the slightly longer term performance of all the different markets I've got going on in my portfolio itself. Okay, let's have a look at the portfolio itself now. Many regular viewers will understand exactly how I have things set up. It's very nice and simple, but if you are new here, this is my ISA account inside my InvestEngine account. I also do have a small self-invested personal pension too. I'll just scroll down to show you the accounts and the different portfolios I have set up. Most of the portfolios I actually have in my account have nothing in them, and they're actually there because I've done them in different previous videos and have them shared so people can play around. Because I do like to play around and just show people what's possible with the different investing portfolios that are available. So I'll just scroll down here. You can have a look here in my self-invested personal pension. That is invested very, very simply in a single global index fund. And I'll just scroll down here to show you which one that is. That's VWRP from Vanguard. I'll just show you up here all the times that I've contributed money into this one. I don't regularly contribute money into this at the moment. I'm actually concentrating more on the Vanguard side from my company, because at the moment this SIP can only take contributions from you as a personal individual. But you can see all the activity that's gone on in the account, the black little dots here of every time I've contributed money into this account. And also remember, you've got the tax relief too. Anyway, I'll leave that part ticking along, but more interestingly enough, here's Toby's world, I call it, and this is my actual ISA account now. So let me just go in here and see the performance, and I'll also break down everything that's been going on inside the account. Portfolio itself really just mimics a global index fund, and by that I mean the larger the market cap weight, the more money I put in here. And I have things separated for a couple of reasons. One, so I can save a bit on fees, and two, so I can tinker a tiny bit around with it. And if I really wanted to make some drastic changes, I can absolutely do that one as I see fit. So for example, the US here, the S&P 500, how I have it represented is around 64% of the market cap weight of my portfolio, which matches pretty closely to what it would be in a global index fund. Now there's two lessons I wanted to go through in this portfolio update this month. Now, if I just use the 6-month chart here, I wanted to talk about two very interesting things. Just have a look at this. When we zoom out over 6 months, which is not really a very long period of time, but just see the amount of volatility that's been going on in the stock market in this portfolio alone. For example, if I have a look at some of the lowest points, this was back at the start of the financial year when many people's hair was on fire. If I look here when I just invested my same amount of money I do regularly every single month, you can see the portfolio low of around £44,000, which then, if we have a look from the high perspective, we can just see just the huge swing that's gone on to where the portfolio is now, around £51,511. So that's an enormous swing, which I think is around 16 or so percent. So in a 6-month period of time, the portfolio has swung 16%. And I can very easily see how many people, and especially beginners who've only been doing this for a couple of years, got very, very scared at this bottom point and sold out. And many people I see continuing in my comment section saying how they sold out into other different kinds of investments. They're waiting for things to get better. Well, I really don't know how you can understand when things will get better and you can predict the market and do these sort of things, but each person to their own. You can see here what I tend to do and what I just stick to is just making sure that I dollar cost average no matter what happens. So at the moment I have things set up as £1,000 a month I can invest, but really that's just a personal thing to me. Whatever you can afford to invest, it's all important to make sure you stick with your own plan. But from my perspective, the first of every month, everything gets automatically invested, and all these little black dots here are when I make my purchases. So you can see here, as I just don't try and time the market, sometimes I get a good price and sometimes I get a bad one. You know, for example, this here at the bottom makes it look here on the 7th of April that I did, the best timing ever. When other times I would buy right at the top back here, over here, as you can see, back in February and March. So overall though, what's really important to remember is that I'm getting that average price over the long run. That's what's really, really important. So that's the first key point here I wanted to make in this portfolio update. This volatility is very much part and parcel of investing. It's very, very normal. Nobody can tell you what's going to happen next. Nobody can tell you how much you're going to have to put up with in a 6-month period, for example. But I personally would expect volatility to just continue like this indefinitely. There's always going to be these highs and there's always going to be lows at some point, but nobody knows when they're going to occur. So just get used to that, strap in and try and stick with the long-term plan. At least that's my opinion. But remember, I'm not your financial advisor, and please do seek financial advice if you need it. Now, just before I move on to my second point, remember, if you do want to get signed up with InvestEngine, open up yourself an ISA or a self-invested personal pension. You can use a link in the description, or you can also use the code Toby in the profile section of your account. Once you complete registration, putting in at least £100 into your account, you will get a cash bonus up to the value of £100. Remember that £100 does need to stay invested for at least 12 months. Other terms and conditions apply, make sure you read those, but feel free to use that to get yourself started investing with InvestEngine if you want to use one of their accounts. Let me also remind you that InvestEngine do the same for business accounts. So if you own a limited company and you want to invest some of the money and some of the spare cash you have lying around, don't forget you can also open up an InvestEngine account here, and there's a cash bonus of up to £200 in that account. Please make sure you read all the terms and conditions themselves. It's actually something I use myself personally, and I did do a video about this one if you want to look into some more details later. Okay, the second point I wanted to make in this portfolio update as a bit of a lesson was this one. Now, if I scroll down and I actually have a look at the performance of all of my different ETFs in this portfolio over the last 6 months, I found something quite interesting that I think will highlight this point. So if you just have a look here, you can see the different ETFs I have and where the gains and losses have gone just in this 6-month period. As you can see, the biggest holding, the S&P 500, has actually been the biggest laggard when we look at from a percentage perspective and an amount perspective here. So over the past 6 months, the unrealized loss has been £2,721 out of that 32,000 in the whole portfolio here. But as you can see, quite interestingly, 3 other areas of the portfolio have actually done really well. You can see emerging markets has done pretty much flat there, but developed Europe excluding UK up 12% there. FTSE Japan just holding it steady there, up plus 0.061%. And then actually a bit of an outlier as well, the UK here actually up, represented by the FTSE 100, up 7.94%. Now, what I wanted to point out here as well is just how important diversification is. Now, my personal view is that diversification is essential for investors moving forward, because we don't know which area of the world or which market or which companies are going to do well during our investing timescale. My investing timescale is many, many decades. So from my perspective, I like to own assets and like to own stocks in every part of the world, because just because a stock is headquartered in Japan, for example, doesn't mean it can, sell everything globally, for example. Likewise, the stocks in the S&P 500 are listed in the US, but they can also do their business globally. So I like to make sure I'm well diversified. Because I don't invest everything I have into the S&P 500 on its own, over this 6-month period at least, I've put myself in a better position because I've been well diversified. Because while the S&P 500 has been sinking a bit, other areas of the world have taken a bit more of a gain as people have exited US stocks, for example. And I think this is a really, really important lesson to remind yourself what you're getting into when you are investing and why diversification is so, so important. Now, my personal preference is to go be more of a global investor rather than just the S&P 500. It's always going to be a personal decision, up to you. But I think this highlights it and just explains why I do things the way I do. Now, I do share these portfolios as well, and I do share some other portfolios. You'll find those in the description of the video. If you do want to have a look, just have a look around. Obviously, I can't ever suggest that people just copy what other people are doing. I think that's a bit mad. Use it as a bit of inspiration. Just click around, understand how things work, and really trying to understand what these ETFs are, what investments are, and how you can best put your money into your ISA account or your pension, for example. Anyway, on that note, I'll just zoom out and you can have a look at the entire account and how I've been very, very consistent investing every single month. And you can go back through all of my portfolio updates. So if you really, really want to see exactly what I do and how I deploy my money, as you can see, I don't bother trying to time the market. I just let the market do what it does. And over the very long term, I hope to do well, but nobody can know the future. Anyway, happy investing, and I'll see you in the next video.